All right, let's dive in. Hi, everyone. I am Crissi, the founder of Penny Finance. This is our monthly masterclass series, and today's topic is everything mortgages, and specifically how you get that approval and how you get a winning approval. And we'll dive into that. The reason we are here is because the number one goal that we see in your money goals as Penny members is to buy a home. And the good news is single women are the fastest growing population of new homeowners in the US. This is incredible and super, super exciting. And so we know that it's really, really important in our community to figure out how to buy a home and how to do it right and well. So that is why we're here. The way we do things as Penny is we bring the experts to you. So as you know, we're a financial planning platform, and on the mortgage and real estate side world, it is a whole different ballgame. So we brought in our friends, Lisa and Christina, today. Lisa is a Boston real estate advisor. We met in Penny's office, actually. She has done 50 million in sales over the past 5 years. So congratulations. That is absolutely amazing. And she's here to share all things from her perspective from an agent side. So someone who helps you buy a home. Then on the lending side, we have Christina. Christina's with Guaranteed Rate. She focuses on the Northeast region. So Massachusetts, New Hampshire, Rhode Island, Connecticut. She has 15 years experience in the mortgage origination space. And the best thing about Christina is she was named top 100 women mortgage originators. So not only are we so excited to bring in the experts, but I just love seeing women crushing it out there in the world. It just makes me so happy. So so excited to have you both with me. Let's dive in. For those of you on the call, ask questions in the chat. Mandy from our team, she moderates. She's going to jump in. Anything you want to know while we're going through this, anything that's confusing, stop us. We'll dive in. One thing I wanted to start off before we get into the nitty gritty of how you get that winning mortgage approval is how many people actually get approved for a mortgage. I was shocked to see this stat. Only 8% of people get rejected for a mortgage. I thought that that would be much higher, especially in the world after the financial crisis when, lenders were supposed to tighten up their policies around who gets a mortgage. So I want you to plant this in your head because a lot of people in our community think, oh, I'm not qualified to get a mortgage. I don't make enough money. I don't have the down payment. There's no way I can do this. Well, look at the numbers. Only 8% of people get rejected. So that's one thing just to reframe your mind and your money mindset around buying a home and getting approved for a mortgage is you can probably get approved. Let's dive into the agenda. So what are we going to cover today? Steps to getting your dream home, understanding different loan programs and rates, how to pick a preferred lender and an agent, getting a pre-approval letter, and we'll go into what that is. We have an example of one, setting your budget, and then learning about the market and touring properties. And then which of these do you do first and in what order? First topic, exploring different loan programs. And the reason we put this first is one of the biggest barriers to buying a home is down payment, especially for people in our community who has hundreds of thousands of dollars sitting in their bank account. Not many of us. But there's a lot of misconceptions there. You might not actually need a 20% down payment. So we wanted to go through, there's 2,000 different home buying loan programs in America. And so we're gonna go through them and teach you all about them. Let's start with lowering your down payment requirements. And Christina, I'm going to bring you in on this one. So everyone says 20% down payment, 20% down payment, but really in reality, you could go as low as 3 to 5% down payment on a mortgage. Can you walk us through this and how this works? And if there's any added costs that people need to think about if they're not putting 20% down on their house?
Yeah, absolutely. I mean, I think it's just the preconceived notion that everybody thinks that 20% down is a must when buying a house, and it's false. There is no reason why anybody should, could, or would have 20% down to buy a home. It's just there are so many programs and products out there to help so many buyers that don't have it with as little as 3% down, with as little as 5% down, and there's no penalty to that. So the standard is if you don't have 20% down payment, then you pay what is called a private mortgage insurance. Okay. And the private mortgage insurance comes into play when you put less than 20% down to protect the lender. And it's a very small monthly fee that you pay. And they've reduced it quite a bit because PMI used to be more expensive. It's not nearly as expensive as it once was. So most advisors are saying at this point, put as little as 3% down or 5% down. Keep money in your pocket, to fix up a bathroom or whatnot. But you do not need 20% down payment for a purchase, especially your first one. Who has it?
Replying to Nadia in the chat, she said, well, 20% down is encouraged because who wants to pay this extra mortgage insurance? And we agree with that at Penny, right? Like if you have the 20% down, we don't want you paying mortgage insurance. However, a lot of these programs that we're going to go over now do not require you pay mortgage insurance, right? They waive that piece of the puzzle. Is that right?
Some can get rolled into the loan, so there's other ways to get around it.
Yep.
But standard across the board, if you don't have 20% down, you pay that very small minimal fee. Yep. But you can get around it with other options.
Right. So let's talk about government loan programs, because I think these are really great. And you don't hear, when I look into the space, you see a lot of the private mortgage companies out there. What is FHA, VA, USDA, and what do these programs look like, and how do you become eligible for them?
Great question. So FHA is Federal Housing Authority loan. So it's a government sponsored loan. So it's all mandated by the government. Same with VA and USDA, right? So they come with less down payment options. You can do VA 100% financing as long as you have your certificate of eligibility and the lender approves that. Then you can put zero down. There's, sometimes there's a funding fee depending upon, where you're at in the VA process. And then with FHA, it's also a government sponsored home where you can put 3.5% down payment. You can be a first-time home buyer. There is PMI again, but it does allow you to get your foot in the door with as little as 3% down payment. And I think right now, especially in this market, it's getting your foot in the door with a less down payment so that you can start to build the equity, right? Every month when you make your mortgage payment, you're continuing to build the equity. And as the equity builds, so doesn't your account. And then therefore, you're creating a little pot of money so that when you're ready to buy the next home, maybe you have a little bit more money to put down at that point.
And then the last question for you, Christina, and I want to bring Lisa in to see what she's seeing in the market. But another new concept out there is buying down your mortgage. What the heck is this? This is even a new concept to me and that I have not heard of.
You know what? It's brilliant. It's actually been around for a very long time. We just haven't had the need to utilize it, to be honest with you. So it's ultimately a buy down mortgage product. Okay. So you're basically asking the seller to give you a credit, okay, up front. So when you start negotiating your offer, you're asking, instead of reducing the price, could you offer me a concession or a closing cost credit to help me buy down my interest rate? So instead of the interest rate being at 7%, my rate can be at 5%, which helps alleviate my mortgage, my mortgage payment.
And the seller pays for this. Why would they pay for that?
Great question. Why would they pay for it? So the seller is willing to pay for this in very unique instances. So when you're in the fall or the winter markets where there's not as much, movement in the market, the seller really wants to get out of their home. The seller's going through a divorce and they really need to offload a property and they want to move it. And they don't necessarily want to drop the price. Giving a credit of $10,000 could actually benefit both of them because they're keeping the price where it needs to be and not, lessening the prices in the market. And it's offering the buyer a much better interest rate, which is ultimately lowering their payment. So, and you can roll it into your financing, not to get into too much detail with that, but you don't necessarily, it doesn't It has to come from the seller on the closing disclosure, but you can ultimately agree on a price. Let's say you're agreeing at 500,000 on a purchase price and you won out in the competition. And now you can go back and increase the price to 510,000. So you're increasing the price, but now asking for 10,000 credit so that you can actually buy down your interest rate to that 5%. Because it feels better at 5 than it does at 7. Yeah.
Yeah. Lisa.
Yeah.
What are you seeing in the market? What are buyers doing in terms of, are they using this strategy of buying down the mortgage to deal?
I think so that's a great question. I think buyers and sellers are in a very challenging market right now, right? So buyers, they're dealing with higher interest rates and sellers are dealing with less demand pool. And so I think both parties need to kind of work together to come together to create a deal. It's almost like a meeting of the minds. And so to what Christina said, I think you're seeing a lot of compromises, and it's going to be property to property, right? Like, so I think some property, it's going to be competitive and it'll move quickly, but then there are your biggest negotiation tactic. Your biggest negotiation tactic is looking at the properties that have been sitting for a while and seeing if you can come to different terms with the sellers. So at the end of the day, how the seller gets like his or her money, they're going to net a profit, or they're going to net the proceeds, whether or not they kind of work through it in terms of a buyer credit, or if they're buying down the mortgage. At the end, if they're still getting the number that they want, my experience is that the sellers will work through the terms with the buyers to make sure that it's conditions that work for them, as long as the bottom number stays the same. So we are seeing a lot more compromises and negotiation with both parties versus, the past 2 to 3 years when the market was like white hot, like we were seeing less of that negotiability.
Right. Then we've listed a few other programs for folks to look into: loans with flexible credit score requirements, assistance with closing costs. If you're a veteran or firefighter or educator, you might have other programs you have access to. Mandy, can you drop this link to this article that we wrote with links to all these different programs so keep in the chat so people can explore them? The other one I wanted to touch on before we moved on to the next step is Biden's $25,000 down payment toward equity act. I don't think a lot of people know about this, but President Biden has a program where you can essentially get a grant from the government of $25,000 to help with your down payment. Have you, Lisa, Christina, have been seeing people take advantage of this? Or is there any things we need to know about this program so that people know, does it take a long time to apply for? Is it like a month-to-month long thing? Anything you know about this program would be super helpful.
I haven't worked with any buyers who specifically utilize this program. I think with any sort of government program, there's going to be some sort of like process and bureaucracy involved, right? And so if you do plan on utilizing the program, I would say connect with your realtor, connect with your lender, and then kind of we can work through the specifics together. And you definitely need to add some sort of leeway or lead time, because we all know that like things with the government just take a little bit longer than if you were going through the private channel. So, if you have a specific timetable in mind, you should, do your due diligence and your research about this program earlier rather than later. But in terms of specifics, haven't worked with a buyer who has utilized the program yet.
Yeah, and just to add on to that, Lisa, I have the same sentiments. I don't have anybody specific, but whatever market you're in, you can always check with your local, your town, whatever city you're in, you can see what their down payment assistance programs are, because it's different no matter where you are. So always check to see if your town is offering those or your city's offering those, because they are available. Sometimes you just have to dig for them. And then sometimes you do have to apply ahead of time and whatnot. So you
Right.
do want to be aware of that.
So the bottom line with this is like, I think the biggest takeaway we want for people on the call is, you know, there are a lot of creative options to get a really great program so that you either can pay a reduced down payment, get a potential grant, or get the rate that you want by negotiating with your seller. Mandy put the link into the chat. That's step one. What program are you going to use? The next step is choosing your agent and choosing your lender. This is very important, and this step should come before you even start looking at homes, because you obviously can't make an offer on a home without an agent. But also, I think what has changed in the market, and Christina and Lisa can confirm this, is you used to be able to, put an offer on a house without a pre-approval letter from your lender. Now, a lot of deals require you have the mortgage pre-approval ahead of time. So you want to do that upfront work before you fall in love with a home and want to put an offer down. So we put this slide together for you of what are the red flags and what are the green flags for how you choose a local agent and a lender. So let's start with the agent. Lisa, can you walk us through how someone should think about picking their agent and why finding a local agent is so important?
Yeah, so I think first and foremost, before I get into the bullets, I just want to caveat that there are a lot of agents out there and there are a lot of good agents out there. You have to just find somebody who is compatible with you and somebody you can trust. That is the first and foremost thing that you want to do. Your agent is probably going to be the person that you see more than your significant other, more than your friends. You're going to see them every single week, multiple days a week, and you just want to make sure that you actually physically enjoy their company. They're going to be a very important person for however long that search duration is. And you don't want to go into a tour going, have to meet my agent. She's so boring. I hate talking to her, or, vice versa, so that's the most important thing. It's almost like finding a partner. You want to find somebody that you vibe with and that you gel with and that you trust. And then the bullets are kind of get into the specifics, but that's the overarching umbrella that I want to flag. The one thing that you want to make sure is that you're working with an agent that is familiar in the market that you want to purchase in. Your agent is supposed to be an advisor. They're supposed to be a guide. So you want to make sure that they understand the neighborhood that you want to be in. They don't have to be like a local resident or hyper focused in that market. As long as they can speak intelligently about the area, then you're in good hands. A lot of the times what I'm seeing is that because inventory is so slim, especially in the Boston market, you sometimes want somebody who can kind of like know that's knowledgeable about like a few different towns, because you have to spread out your geographical location if home ownership is, your goal. The second point is that you don't want somebody who is just solely focused on the transaction or the sale. Like at the true core of the job, like we are salespeople, right? Like we are helping you buy a home, but the environment in which you do buy a home can be night or day. Like you don't want somebody to view you just as money signs or just as a sale. Buying a home is so personal. You're spending so much money that you just want to make sure that if you have concerns or if you have feedback, you're in an environment that you can really speak your truth. I call it kind of the cash register test, right? Like we've been in situations where you're shopping in a store, you get to the cash register and you check out and it's like a lot more expensive than you think. And instead of speaking up, you just like hand over your credit card and you leave the store and you're like, why did I just do that? Like you felt like you were in a very pressurized sales environment. And I think it's really important that you find an agent where you have the type of relationship that you can say, hey, I think my budget's changed, or hey, I want to pause my search for a little bit and not get like the fear of the blowback. And I think it works two ways, right? Like you also want an agent that's going to be real with you and say, hey, you want X, Y, and Z. Right now, the market's really competitive. I think if home ownership is really your goal, we need to be realistic about, A, B, and D. And so it's really that relationship where that's based on trust and you can be honest and open with each other. And then the last thing is the relationship ends when the deal is done, right? So this isn't necessarily a red flag, but it is what separates good agents from great agents. If the agent helped you buy a house, and it was a smooth process, then they did a good job. But if an agent goes above and beyond what their duty called for, if the deal closed and you had questions, or if you needed vendor recommendations, then that's like really a great agent and somebody who really is, again, a partner, somebody who cares about you and your goal rather than just the transaction.
Yeah. And just an example of that is like, we just bought a house and, you get your water bill, 2 months later and you're like, wait, I thought the seller paid for that. Like there are things that are going to come up that are going to require you to reach back out to your agent or your lawyer or your lender. So I think that that's really important. One follow-up question on agents. Can you have multiple agents? Do you sign an exclusive with an agent? Can you fire an agent? Like talk us through that.
Yeah, that's a great question. I think usually you have one agent, right? And then that's who you stick with. You can like go around and try to view things with different agents, but think about like the relationship that you build when you're just using one person. That person knows what you like, what you dislike. You're building a relationship and a rapport with them. I typically like to have my buyers sign a buyer's agreement where they're working exclusively with me. And what I tell them is that when you sign that agreement, you're no longer like a prospect, you become my client. So anything you tell me is within the secret walls, and we're building this relationship where you feel comfortable trusting me. I feel comfortable trusting you. I don't get paid until the deal closes. And I think it's that mutual trust of you have my back, I have your back, and we all have the same goal that we're marching towards.
Okay, Christina, on the lender side, talk us through what to look for. What are some red flags? What are some green flags?
Yeah, and kind of they coincide with what Lisa said, right? It's primarily relationships, and that's what it comes down to. So when you find somebody that you're comfortable talking to about whatever, could be anything in your life, right? You're building a relationship. So with your lender, you're doing the exact same thing. Although we're kind of pulling back even more layers to say like, are you comfortable with this payment? Are you comfortable with this scenario, right? So I think that it's okay to call other lenders and see what they're willing to offer. I can tell you, if you call a Rocket Mortgage, you call an online banking institution, you're not going to get the same response. And your needs aren't going to be met the same way that you are with somebody that's local and that has a relationship with other people that are local, right? So you want to, I think the couple of key things that you want to kind of keep in mind is talk to a few lenders, kind of get a good idea of how they operate, see what they offer for programs, right? Because if they're not offering you a buy down and you really find it's imperative that your payment is X and they can't get to X, you can't work with them. They're not offering you anything that's going to help you, right? So you want to just make sure that you're speaking with somebody that's familiar with the local area, has relationships with realtors in the area so you guys can work hand in hand, and then working with somebody that has programs that coincide with your specific needs.
And let's talk about the appraisal bullet for a second, because I think this is so important and you don't really realize this until you're in it and like trying to get the deal done. So can you tell us, like, what is an appraisal? When does that get done? And why is it so important that your lender has a local contact for an appraiser?
Yeah, so an appraisal is a report that is done once you're under contract on a property. Okay, so the appraisal is done to protect you and the lender. Okay, so we send a individual out to the property that does not work for the lender. It's a third party, and they go out and they pull, they take pictures of the property that you're buying, and then they pull comparables within the area to make sure that the value stands true, right? So whatever you're paying, so the purchase price has to coincide with what they're coming up with on a value. Okay. And from a lender's perspective, we can only lend a certain percentage of the appraised value, right? So if you have somebody, let's say from like a big national bank, who's sending out a random appraiser that's not familiar with what's happening in the Boston market, where values are continuing to increase and people are making offers $50,000 over the list price, you know, a local appraiser is going to understand this is what the market's calling for. Where maybe a bigger bank isn't going to have that specific knowledge, right? And the appraisal could come in low. And if the appraisal comes in low, we need to react and respond, because we might not be able to give you the specific loan that you originally signed up for.
And then you have to come up with the difference in cash.
Yeah.
If the appraisal doesn't come in, you have to pay the
You have to pay
difference,
the
because your
difference,
mortgage
right.
lender's not going to give you the full amount. So that's
Right.
so important. And then I think the other thing on local appraisals, and this happened to me with a deal in Florida, I used my local lender in Boston. It took 3 weeks for the appraiser to get out, and we lost the property because we weren't able to get the deal done in time. So I think that that's a huge piece of the puzzle just for people on the phone, because so there's the appraisal and then the inspection. How are they different?
The appraisal is done through the lender. You have to have an appraisal through the lender. Okay. And that's to protect the lender, to make sure that we can give you a loan based off of what the value is. The inspection is something that you do, okay, on your own dime, to make sure that the inspector goes in there that you hire to make sure that there's no crack in the foundation, that there's no water dripping down the walls, that there's no, I mean, Lisa can probably jump on this because this is more her world than mine.
Yeah, the inspection typically happens like earlier in the process, and you just want to have confidence in the home. And so what the inspection does is, after your offer is accepted, you can hire a licensed inspector to come in and just kind of give you a breakdown of what they physically see in the home, any structural stuff, any type of issues with the appliances, etc. And then once the inspection is done, that's when you move forward with a longer form contract called the purchase and sale. And then that's when you go and you move forward with the loan process. And then when you move forward with the loan process, the appraisal is part of it. The home like buying process is going to be different from state to state too, because I know we have people on here that are across the United States. So I'm speaking about it from a Boston standpoint, but New York's going to operate differently. You know, North Carolina is going to operate differently. California is going to be different, and each state is going to have their own process. So once you decide who you want to work with as an agent, and don't be afraid to just like email them and be like, hi, I'm thinking about buying a home. I would like to like sit down and just like have a conversation with you about like what that would look like. Those are the best emails to receive. You're not bothering anyone. And I will guarantee you 100% every agent will sit down, and any agent that's worth their salt will have a coffee conversation with you and go through the home buying process for your particular state/city.
Okay, so to recap, so we started with first looking into your programs. Second, choose a local agent, a local lender. These two things happen before you even start touring homes or making offers on homes. We have some questions, I think, in the chat about appraisals, but I want to hold them because that comes later in the home buying process, but we will get to them. Let's demystify some things, and then we're going to go into the next step, which is like getting that pre-approval, which comes even before you tour the homes. So let's just keep going down the process. So myths.
Yes.
Agent fee. What the heck is this?
So obviously, right, like you are hiring a professional if you're hiring a real estate agent, and the person that you are hiring needs to get paid somehow. So how does that work? And again, I'm speaking from my experience in Boston. It might be a little bit different in other markets, but this is what I know and understand of it. So in Boston, if you are renting, typically the tenant pays the broker fee. If you are buying something, the buyer's agent's commission actually is paid by the seller. So that's a little bit of a difference there. So you as a buyer actually do not reach into your own individual pocket and pay the agent. The seller hires a real estate agent to sell their home. And so there's a fee involved. And then if the buyers have an agent, the seller's agent will share that fee with the buyer's agent. This also dispels like another myth that if you don't work with the buyer's agent, you can get a deal. The seller and the listing agent already have negotiated a fee, and that fee is set whether or not there's another agent involved. So you're not getting any sort of like deal if you don't work with a buyer's agent. And you also you want your own representation, right? Like this, again, it's a large purchase. This is going to be a home that you are living in. You want to make sure that you have your own advocate. It's like if you and your partner were getting divorced, you wouldn't necessarily want to use your partner's divorce attorney. So that's why it's really important to have your own representation and your own advisor. The next myth is that you don't need an agent because you can just search via Zillow. Again,
This comes up all the time. It's like,
yes, it comes up all the time.
And somebody's name on Zillow. Let me just call them.
Yeah, let me just call them, or I'm not like that serious in my home search. I just want to go and see it. I think, again, this goes back to my reasoning of like why your own representation is so important, right? And why you want to hire a buyer's agent that is built on trust, because they do this for a living. They know what to look out for. They know the pros and the cons of like a specific home, and they can flag red flags or green flags if they see it. So one, right, you want your own individual agent because you want an advocate and a partner by your side. But two, a good agent is also going to show you properties that are not on Zillow. Boston specifically, there's a fair amount of deals that happen off market, or an agent can get you in before the public open houses or set up private showings. And time is of the essence in real estate. A deal can happen within 24 hours. It happens that quickly. And if you're slow from the get, you might miss out on that perfect home. And a good agent will carve out those opportunities that you won't necessarily see online, and then also help guide you through that process. And then the last point is that if it is a very competitive property, like let's say if there's going to be multiple offers, you also want another agent, because even though Zillow can get you in through the door, what do you do if there's other competing offers? Your agent is going to help you. Your agent and a really good lender will help you craft terms that are going to be competitive, that are going to be appealing for the seller. Sometimes it's not just about price. It's about your contingencies. It's about your date. And it's about the whole package of the offer that you may not think about. And your agent will help you walk through those different strategies to position your offer to be the most competitive.
And then the last couple of points, which we're going to get to when we set budgets and go through how you get a pre-approval, is I can't afford to buy a home in this market. I mean, I think like no one can afford America right now, so that's a whole separate issue. But yes, you can afford to buy a home in this market. It's really about learning your market, learning what you can get approved for. And then my credit is not good enough. We showed you the stat in the beginning. Only 8% of people don't qualify for a mortgage. Your credit dictates the interest rate, right, Christina? Like,
yeah, 100%.
Even if you have not perfect credit, you're still going to get approved, but your rate might just be a little higher, right?
Correct. Yep, 100%. I mean, you can go as low as 580 on a credit and still get a loan today. So yeah, pay your bills, but yes, your credit cannot deter you from getting a loan.
Right. Okay, so let's talk about pre-approval. So You have an agent, you have a lender, you have figured out, okay, I'm gonna be able to do this. Next step is getting a pre-approval letter. Christina, what is this? Does it cost somebody something to get it? How long does it take? Does it expire? What do you need to get it? And how is it different than a pre-qualification letter? And let me put this slide so you can see an example.
Yeah. So a pre-qualification letter is verbal. That's the most basic, right? So you can call any lender, bank, credit union today and give all of your information over the phone and they can pre-qualify you. Pre-qualification doesn't verify your income, your assets, and pull your credit. Okay, so that's the major difference between a pre-qualification and a pre-approval letter. In this market where I do business, and we are a nationwide company, but where I do business in, the Northeast, nobody accepts a pre-qualification letter. It's only a pre-approval letter or a commitment letter. Okay, so a pre-approval letter, we are going to have you complete an application, okay, that's going to, ask you for your employer, the length of time you've been there, pull your social security, your date of birth, and we're going to verify everything. We are also going to ask you for your pay stubs, your W-2s, your tax returns, your bank statements, and just get a very good total profile of how you are on paper. Okay. So what we do is we compile all that information. We do it all online. You can come into my office. We can do it over the phone, but we verify all of that. So your pay stub income must match up with what you put in the application. Okay. We do a soft credit check. Okay. It's not a hard inquiry. So it is not dinging your credit. It's like the number one question I get before people start the application is this going to affect my credit? No, the answer is absolutely not. We do a soft credit check, does not ding you. It's one credit score so that we can kind of determine where you're at on the credit rating scale. Okay. It takes about, depends on how quick you are with uploading your documents, but it takes about 10 minutes to complete the application, 10 minutes to upload the docs. And then for us, we will have a pre-approval letter to you within 24 hours of reviewing that documentation. And this you hang on to for 120 days. So this is good for 120 days. Once that 120 days is up, then what we do is re-up it. We connect back on the phone again, although we've been talking throughout that 120 days to make sure that no job changes have been made. You've been paying your bills on time and everything is basically up to date. And then we reissue you another pre-approval letter if you haven't found anything in that 120-day time frame.
And does it cost you anything with the lender to get a pre-approval letter?
Zero with us. Guaranteed rate, there's no cost for a pre-approval letter.
So it's free. It takes about 10 days if you upload all of your documents. You do a soft credit pull. I see a comment in the chat that someone said they were told they do a hard credit pull.
Some banks and lenders still do a hard credit check. We do not. A hard credit check is done once you request the file to go into underwriting. Once an underwriter gets their hands on the file, they need to do a hard credit check.
What does that mean? Do you have to have an approved offer and P&S agreement, or what stage does that happen?
You can request, and I do ask all of my buyers that are serious, and Lisa can vouch to this too, because in this market, the sellers want to see how qualified you are. And if you do all of your homework up front, meaning pre-approval letter, commitment letter, okay? The commitment letter is a pre-approval letter on steroids, okay? It means we've moved the pre-approval into the underwriting queue. So the underwriter now has signed off on your income. They've signed off on your assets. They've reviewed your credit, okay? But they need to see the whole credit. They need to see 3 credit scores and the full breakdown, which would ultimately be a hard inquiry. Okay.
Okay, so what Nadina is saying in the chat, a hard credit pull would happen for basically the commitment letter, which means your bank or whoever your lender is pulling your credit score from all 3 agencies, not just one agency. And that makes you more qualified to get the house and for the loan.
Yes, it just kind of gives you a little extra edge if you need it. Yeah.
So the recommendation we'll give to the group then is when you're working with a lender to get a pre-approval letter, ask, are you gonna pull a soft or a hard credit check?
So you actually, within our system, and everybody's different, within our system, you choose that when you
Oh,
complete the application,
okay.
right? So you decide, all right, I'm just gonna go through the bare minimum basics of
Mhm.
a pre-approval letter because
Yep.
I wanna see this house this weekend, and before I go, my agent's gonna say, do you have a pre-approval letter? You
Yep.
cannot get in the car with the real estate agent if you don't have a pre-approval letter. No one's gonna take you seriously, right? So
Yeah.
that's the basics. And there's nothing wrong with just doing that
Yeah.
and then waiting until you have something under agreement. And
Okay.
then you can do the hard inquiry poll.
Okay. Lisa, anything you would add on pre-approval letter from your perspective with touring homes, making offers, things our members should think about when getting their pre-approval letter done?
Yeah, and I just want to emphasize that just because you get a pre-approval letter does not necessarily mean like you are committed to finding a home within 2 months, right? Like I think a lot of people struggle with like getting over the hurdle of even taking that first initial step of getting pre-approved because they're like, I'm not serious. Like I'm not, like it's only the fall. My lease doesn't end until next year. Like I don't like I'm just browsing right now. It's okay to browse. The pre-approval letter really just gives you pen to paper numbers in terms of what you can afford. And I've had buyers who, it takes them a year or two to find out to find that perfect place, but they've always had a pre-approval letter because they just want to feel confident in terms of like their numbers. And also it's very important that as we are in a rate environment where rates are going up or rates are going down, this is why you want to work with like a lender, because if you're trying to keep your monthly payment to a certain amount, as rates go up or down, it really affects your buying power. And if you're working with a lender who can keep you updated in terms of like the rate environment from a weekly standpoint or a monthly standpoint, it's going to impact like ultimately your budget and what you can see. So a lot of people just kind of like sometimes will use like mortgage calculators online, and that's just not like an accurate representation of you as a financing candidate and what you can truly afford. So if you really want a realistic house search experience, I would say the pre-approval letter is your first step, but don't feel like you are committed to it. And I've had buyers who get a pre-approval letter and then realize that, buying a home isn't for them right now and take a pause, and that's totally okay too. But the pre-approval letter is just, it's for your knowledge. It's not for anybody else's. It's so you have information to make you secure and make you feel safe. And if you're like me, I like to info gather as much as I can. It becomes my security blanket. And so this is part of your information gathering due diligence.
That's a great segue into the next step in the process, which is setting your budget. Before we jump into setting your budget, I just want to throw a couple numbers at people. That is how you back into your pre-approval purchase price, your loan, and your rate. So one big number you should know is 43% debt to income ratio. What does that mean? Lenders are going to look at how much debt you have versus how much income you have. Because one of the biggest things with taking out a mortgage is, are you going to be able to pay this mortgage every single month? And one of the biggest determinants of that is, well, how much debt do you already have and how much income do you have? It's pretty simple, but this is the threshold for most banks. There are some banks, I will say, like credit unions or banks that don't sell off their mortgages later that might have some flexibility in this, but this is the number you want to focus on. We have a calculator and Penny to figure this out. And then we talked about this already. 720 credit or higher gets you the best rate. So if you're thinking about buying a home, I want you to have this benchmark in your mind of how do I get this session is the winning mortgage approval. The higher your credit, the better your rate is going to be. Where are rates at? And then we're going to go into budget. Rates today, we've been saying 7%. They're 7%. A 30-year fixed mortgage, 7%. This is crazy. Like 3 years ago, they were like 3%. A 15-year fixed mortgage is less, 6.375%. Why? Well, you're going to have bigger payments. So you're going to own the home in 15 years. So you're going to have to be paying more every month. You get a lower rate, which is awesome, but your mortgage payment is going to be much higher. We talked about FHA and VA loan programs in the beginning. I just wanted to show you some of these rates so you have them in your mind. 6.6% for an FHA and 6.5% for a VA. So the reason we highlight these programs are not only do they help you potentially have a lower down payment, but they also help you lock in a lower rate. Just wanted to touch on rates before we went into budget. So as Lisa said, which I think is really important, is, you know, sometimes you're scrolling through Zillow and you're like, oh my God, this house is beautiful, but you have no idea if you can afford it. The pre-approval letter does help you figure that out. Like your lender, Christina, or someone like Christina are going to take all of your numbers and say, like, this is what you can afford. Well, wait, not what you can afford. This is what you can get approved for. At Penny, we feel very strongly that just because you're approved for a mortgage at a certain amount doesn't mean you can actually afford it. It doesn't mean that's actually how much you should spend on a home. Like, you need to really think about what is the budget for your home based on everything going on in your life. What are all your other expenses? Oh, and by the way, the mortgage isn't the only expense in your house. You have to pay property taxes. Sometimes you pay an HOA fee. Then you have utilities. Then if you're like me, last week, I no joke, spent $2,000 on my house because the hot water heater went. We had a hornet's nest we had to take down, and I backed into the garage. So there are so many things that, yes, you're a new mom, you're going to back into the garage. And there are just so many things that are going to add up. So it's not just the mortgage that you're paying for, all the other things with the home. So if you go into Penny, this is the quiz, but that's not what I'm going to show you. I'm going to show you a budgeting tool. Let's put in some example numbers. We have tons of home buying calculators, renting or buying, the actual cost of a home, mortgage secrets, a lot of what we're talking about today. But let's do a couple budgeting exercises so you can see, like, what can I actually afford? And that helps you dictate when you go to your agent, when you go to Lisa and say, okay, I'm ready. I got my pre-approval letter. She's going to say, okay, what's your budget? Like, what is the value of homes I'm looking for? This will help you figure that out. And then another question we get all the time at Penny is like, well, I'm renting right now. Should I buy? Like, I'm throwing all this money towards rent. Should I buy? This helps you visualize that. So say your monthly paycheck is $3,000. And we want you to add up all of your monthly expenses here, not including housing. Let's say they're $1,500. We always want you putting money into retirement. Let's say you're paying $1,200 on rent. That's gonna give you a budget of $200,000 for a home. Probably not gonna afford you anything anywhere, right? So we want you to use this calculator to see, okay, $1,600 a month on rent, $400,000 home, and go in here and just play around with it. How much money do I need to be earning? How much money do I need to be spending? $960 a month for monthly expenses is pretty low. The average is $2,000, and just play around with this. $3,700 rent payment, equivalent home, $680,000. That's pretty good, right? If you increase your retirement savings, what does that do? Play around with this to help set your budget. Any questions on budgeting, rates, the financial side of the picture? And then we're going to jump back into the home buying process.
No questions yet.
Woo! Okay. I think a lot of people have done this already in the Penny community, so that's great. That's everything that we covered. Let's go back. Let's go through the list. So what are the steps? The steps are, what are the programs and the rates? Pick your lender, pick your agent, get the pre-approval letter, set your budget. And then one thing we didn't talk about a ton, Lisa, I'll just give you a few minutes to talk about this. Then what do you do? So you have your agent, you say, I'm a pre-approved for a $500,000 loan.
Yeah, so
Budget is up to $600,000. What do I do?
Perfect. And then, so when you have that introductory meeting with your lender, with your agent, and you're like, okay, perfect. Like, I want to work with you. They are going to ask you, they're going to start probing, like, how many bedrooms do you want? What's really important to you? What location do you want? And then that's going to paint a picture of your ideal place. And then you're going to start searching, right? She or he is going to, they're going to create a home search for you. You're going to start looking at listings as they come on. And then you're going to start touring properties together. You're going to start going to open houses. You're going to start previewing stuff. And it's very important to go physically into these homes, because what you see in a picture is going to be sometimes very different when you actually physically enter a space. And when you enter a space, sometimes your non-negotiables become like, I can actually deal with this, or you find out things that are deal breakers. And then you start to kind of like learn what your budget gets you, right? Housing, we're in a housing shortage all throughout the United States. Housing prices are on the rise, and there's going to be kind of a sticker shock of like what your money can get you. And so when you start touring places, you can see, all right, this is what my budget can get. But if you're not happy with that, that's when you start making adjustments. Hey, I really value space. I'm willing to compromise on location so I can get a little bit more space, or vice versa. Hey, all of my friends are in the city. I want to stop wasting money on rent, but location is really important because I really want to be near my support system. Maybe you compromise on the space and you're focusing on location, and you're really not going to have these like tough conversations that work out these compromises until you start learning about the market and touring properties and figuring out what's important to you in your next home. And then your agent will also, I always feel like an agent becomes like they're an advisor, they're a partner, but they're also a very good therapist, and they will ask you questions to really kind of get into the heart of like what you truly want, because sometimes what you say and what you want are different. And it's my job also to kind of uncover and peel back those layers to really find out what it is that you want.
Right. Like, do you really need the garage?
Yeah, exactly. You have a car. Do you really need a garage?
Yeah. Okay, so you tour properties, you find a property, like you're putting in your offer. So I want to get back to appraisal and inspections, because we got a few questions in the chat about that. So
yeah,
you're putting in your offer. First question is, so waive inspection and appraisal. Help me with that. Should you waive the inspection?
Sure.
Who pays for the appraisal? When does the appraisal happen? When does the inspection happen?
Sure.
And I want both of you to dig into that one for me, please.
Yeah. So inspection and appraisal / mortgage, they're what we call contingencies. So contingencies are in place. So you as the buyer have protection throughout the home process. I just kind of want to take a step back and say, you are allowed to back out of the transaction whenever you want. It can be the day before you close. And if you have like a change of heart, or if something happens, you are fully and legally allowed to back out of the transaction. Your recourse is the deposits that are in escrow, so that you have kind of paid in as you've gone through the process, right? So you as a buyer, with each milestone, you pay a deposit, and the deposit is held in escrow. So it's just held by like a third party. And it's just kind of like, it just shows your commitment. So the contingencies are in place where if you decided to back out of the transaction due to a contingency, you get your deposit back. But if you do back out because of something else that's outside of the contingency world, then you lose your deposit. So there are two contingencies. Typically, if you're a first-time home buyer, your first contingency is your inspection contingency, and your second contingency is going to be your mortgage / appraisal contingency. Your inspection happens at the beginning of the process. So let's say we tour a home, then you're like, okay, Lisa, this home is perfect. I want to put in an offer. You put in an offer. Your offer gets accepted. Congratulations. Woo! You pay your first initial deposit, and these deposits are going to be different depending where you are in the state you're in. In Boston, typically it's about $1,000. So you pay that initial deposit. So it shows to the sellers and the other party that you're moving forward and you're committed and you have a little skin in the game. And then you go through the inspection process. The inspection is so you feel comfortable in the structure of the home that you're buying, right? Like, you are not a professional. I am a professional, but I'm not a professional in like the inspection realm. I can point out a few visible things, but an inspector will have tools and gadgets and gizmos that can kind of drill down a little bit deeper to tell you about the home, right? Whether if there's structural issues, if there's any water damage, if there's any moisture or whatnot. If the inspection goes well and there's like green light, all good, then you have satisfied your inspection contingency, and it gives you the confidence to move to the next part of the process. If you find a bunch of red flags and you don't feel like this is the right house for you, then you can back out of the transaction. And because you are backing out due to a contingency, you get your deposit back. Then we move on. So once you have your inspection, then you move to the mortgage contingency, right? And the mortgage contingency is there because we want to make sure you get funding and you get financing for your home. If there's some reason why the financing can't go through, we want to make sure that you're protected. And then I can pass it on to Christina to talk a little bit more about the mortgage/appraisal process.
Yes, and the appraisal, well, so to kind of just piggyback on what the contingencies are, you do have a contingency in your offer for the mortgage contingency, which protects you in the event that the appraisal comes in low, right? So if the appraisal comes, so the appraiser goes out to the property, the comps that they're using are comparable to the property that you're buying, and the appraisal comes in low, you have a mortgage contingency to protect you. So at that point, you can go back to the seller and negotiate price, okay? Or you can pull out of the deal if they're not willing to negotiate with you. Because you really want to go into this making the biggest purchase of your life and knowing that you're overpaying on a property by $100,000. You don't want to do that. You don't feel good. Nobody feels good. And now you're $100,000 in the hole. So when you go to sell it, right, you're $100,000 behind the game if the property, value hasn't increased at that point.
And who pays for the appraisal?
The appraisal is paid by you.
Okay.
The buyer.
It's added, is it paid at the time of the inspection and the appraisal, or is it added at the end and everything's added all up and we go to the closing table and that's when you settle up on all those expenses?
So the only expense that's paid up front is your application fee and your appraisal fee.
Got
Okay, because we pay the appraisal company directly. So
Separately.
you pay us, we pay them. Because again, it's a third party. It's not us doing the appraisal.
How often does these days do the appraisals not come in?
It's pretty rare unless it's completely off, right? Like it's very obvious when you're making an offer $300,000 over the list price, right? That the appraisal is going to come off.
Yeah.
Keep in mind, you could have 5 different appraisers going out to the same property. You're coming up with 5 different values for that home, all within a very small amount, right? Like we might be off 10, 15,000, but nobody's coming back with the exact same price, right? The other component that we do a guarantee rate, which I think is cool and very helpful, is that the appraisers don't release the appraisal report that they write until they have a copy of the purchase and sale agreement. Okay. So they ultimately know what you're paying for this property, right? It's not really cheating. It's just guiding them to say like, hey, Peter's paying $425,000 for this property, right? Because like otherwise you're pulling numbers out of a hat to say what is the true value of this property,
Yeah.
So it's a guide for them, right? Which is good. And it's good for you too, because if we're really off, we're really off. But you shouldn't be off by that much.
And I think that's why it's so important to work with a preferred lender and agent, because when you are putting in an offer that is so far beyond like market comps, like because it's a property that you absolutely need to have, a good agent will say, hey, I understand that you really want this property. It's really significantly higher than what the market is commanding in terms of a purchase price. You might run into an appraisal issue and they will get ahead of it, and and they'll work through it with you. Or your agent will run through comps before you put in an offer and say, if you bought it at this price, there really should not be an issue with the appraisal, because you're like at market value. 10 other homes on this block sold for exactly what you're paying. So I feel really confident that you're not going to run into that issue. And let's say, God forbid, you do run into that issue. When you are working with a really great team, they're going to help you problem solve. They're not going to leave you in the ditch, right? Like, so we are going to figure out what we can do with like a down payment. How can we kind of flex that up and down so we're bridging that gap? I will go back to the sellers and see if we can negotiate, or, if the appraiser is really off, can we challenge that appraisal? Sometimes that works too. So I think there's solutions. And so, that's really a reason why you should work with somebody that you trust and that you are committed to, because when you work together buying a home is a team sport, and you want to make sure everybody's bought in and feels like they can trust each other, because it's only going to make things a lot smoother.
Yep. Mandy, we're at the top of the hour. We covered so many things. Everyone's asking, is there a recording? Is there a recording? Is there a recording? Yes, there's a recording. It will be sent out within 24 hours. But any other questions for our amazing panelists today on getting your mortgage approval in the home buying process?
I have nothing actively.
Okay, I'll give people like 30 seconds before we close to ask their burning questions. I know we answered a lot of them throughout.
We definitely had some emotion.
Yeah.
Nadina, so basically, if I get cold feet before closing and I change my mind, I lose my deposit. Like, yeah, it's scary.
Yeah. Isn't there though like a 10-day grace period or something on your offer where you can back out no matter what, or am I wrong on that?
I mean, so before you sign the purchase and sale, right, there's kind of the due diligence period that typically is like 5 to 10 business days. And then if you do get cold feet, that's typically when your deposit may or may not be at risk, but that's a lower amount of a deposit. So the deposit when your offer gets accepted is going to be nominal, right? Relatively to the purchase price. In Boston, it's about $1,000. And then after you sign the PNS, because you've kind of finished your due diligence period and you're really fully committed to moving forward with the home purchase, that's when the larger deposit is due.
The second deposit is due.
The second deposit is due. And the second deposit is going to be a higher amount. And in Boston, it's typically 5% of the purchase price. And then one thing I did want to point out is you do have closing costs. So that is something that you want to factor into your budget when you are thinking about your down payment. There's going to be extra costs associated that you are going to need to pay outside of the down payment. In Boston, it's typically 1% of the purchase price. So if you're buying like a $500,000 home, set aside, I would say $5,000 or $6,000 for those miscellaneous fees. But that is something that you want to make sure you have in the bank to purchase your home.
Money, lots of outflows. Buying a house renting is not a terrible thing. Obviously a lot of, you build equity in a home, right? Every mortgage payment gets you closer to owning the home and having the equity. But I don't know, my view is sometimes renting is okay. Because there's a lot of costs in buying a home, but when you're ready, and you know your budget numbers and you're ready to do the thing. Yeah, very good point. Like there's the closing costs, there's the appraisal fee, there's the inspection fee. And then on top of the mortgage payment is 60% of homes in America have a HOA fee. Like just think about these added costs when you're setting your budget, so that once you get to the end of the line, you're not, like you said, Lisa, in the beginning, you're not sitting at the closing table like, oh my God, what did I do? I'm going to be broke forever, sort of thing. You want to feel excited and good about the home that you purchased. Okay, let's go to the end. I have Christina and Lisa's contact information listed for you, also mine, if you have any questions about finding a local agent, finding a local lender. Lisa is based in Boston, and Columbus and Over is in Boston, right? You're just in Boston, Lisa,
I'm
right?
just in Boston, but I'm happy to have like a Zoom conversation with anyone, even if you're in New York or California or somewhere in between, and you're just kind of thinking about how the home buying process and if it's right for you. I'm available to have any sort of conversation.
And then, like we said, Christina's in the Northeast, but Guaranteed Rate is a national company. So if you don't have a lender and you're looking for one, please email Christina, because she'll be able to connect you with someone nationally. And like we discussed on this call, it's just really important to have those people on your team ready to go for this process so that you can navigate it all. Thank you both, Lisa and Christina, for joining us today. And thank you to the Penny members for joining this call. We'll send out the recording within 24 hours, and good luck in your home search.
Thank you.
you.
Bye.
Bye.